Because You Matter, Q&A with financial planner Erin Steele. Medicaid as part of your long-term care financial plan by Erin Steele. Purchasing insurance is a hedge. Car insurance is in case you get in an accident. Home insurance is in case something happens to your home, and life insurance is in case you die. The point of insurance is to have something in place in case something catastrophic happens, so that you have the best chance of recovering from the accident or from the fire, or in the case of life insurance, so that your beneficiaries have the best chance of recovering. That's the benefit of insurance. The drawback to insurance is that it isn't a bank account. When nothing happens, you don't get to draw down on a balance in most cases. Most of us recognize and even accept that that is the case for those other insurance types. But there is an insurance that Americans largely ignore. That insurance is long-term care insurance. First offered in the 1980s, long-term care insurance has never reached the same level of acceptance, largely due to the lack of understanding about the need for long-term care or the cost of it. Only about 40% of Americans carry long-term care insurance, but the U.S. Department of Health and Human Services estimates that more than 50% of Americans will develop a disability requiring long-term care services for as long as 2 years, and 1 in 7 will need care for 5 years or longer. The average annual cost of that care is between $20,000 and $100,000, depending on the level of care you need. The best option for paying for long-term care costs is having enough long-term care insurance. That said, many seniors don't have any or enough long-term care insurance, and while age will not prevent you from getting long-term care insurance coverage, waiting too long to purchase it can result in prohibitively high costs. Solving the financial problem created by unplanned care costs comes down to understanding the tools available to supplement or cure the gap that out-of-pocket care costs often creates. Long-term care insurance is just one of the tools, but others exist. A good financial plan utilizes all available options while seamlessly transitioning from one tool to another as needed. One such tool is Medicaid. Medicaid is a federal program each state administers, often quite differently from state to state. One of the many misconceptions about how Medicaid works is that you must be impoverished or broke before you can access these benefits, and there are no protections available. It's common to hear the term spend down, which can be interpreted as spend down and go broke. Spending down to go broke is a bad financial plan. In this article, we hope to outline a few options that will leave this benefit as part of your long-term care plan and allow you and your family protect hard-earned assets. The strategies described below are abbreviated examples. One should not attempt these strategies without advice and guidance from a qualified professional. Community spouse. Obtain immediate Medicaid eligibility for an institutionalized or ill spouse while protecting income and assets for the healthy spouse. Washington DSHS Medicaid allows assets to be shifted or transferred to the well spouse, i.e., the one not requiring long-term care. There is no look back or penalty assessed for transferring assets inside of the marital estate. Penalties and lookbacks only apply to transfers outside of the marital estate. While there are limitations on the amount of liquid assets the healthy spouse can keep, there are no limitations on income for the healthy spouse. So it is common to use a Medicaid-compliant annuity to convert assets to income for the healthy spouse. If done correctly, a Medicaid-compliant annuity would have no cash value, but would produce a guaranteed stream of income that can be used to recapitalize the liquid asset estate. This is a financial rearrangement that changes the look of the marital estate and allows the ill spouse to qualify for Medicaid. Gifting or asset transfer. Obtain Medicaid eligibility at some point down the road, but protect my nest egg. Washington State DSHS Medicaid allows assets to be gifted or transferred to protect assets, but requires a solid knowledge of possible strategies. One strategy is to gift or transfer assets 5 years prior to needing Medicaid for long-term care. This is due to Medicaid's 5-year look-back provision on asset transfers. Another strategy is to have Medicaid assess a penalty associated with any guess, a time penalty equaling roughly 1 month ineligibility for every $10,000 transferred can be assessed by DSHS. This is a simplified explanation and should not be attempted without professional guidance. Standalone plan. Obtain Medicaid eligibility for an individual with the intention of making a wealth transfer upon their passing. Washington State DSHS Medicaid allows an individual the opportunity to convert assets to income using a Medicaid-compliant annuity to meet Medicaid financial requirements. As referenced above, a Medicaid-compliant annuity has no cash value, only a guaranteed stream of income. This is a way to change someone's financial appearance so they qualify for Medicaid. This example is an abbreviated version of the strategy and should not be attempted without professional guidance. LTC Insurance Partnership Plan. Protect assets using long-term care insurance, but still qualify for Medicaid. Washington State Medicaid, DSHS, allows for a program called Partnership, which means if an individual has, for example, a $500,000 traditional long-term care insurance policy with Partnership, then that individual can keep $500,000 of assets and still qualify for Medicaid. Long-term care costs are very expensive. As referenced above, they can easily cost more than $100,000 per year. Many seniors fear running out of money due to those costs. It is important to plan ahead, understand the tools available, and the options that can be used to protect hard-earned assets. BWM information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance. By contacting us, you may be offered information regarding the purchase of insurance products. Insurance products are offered through insurance marketing organizations and insurance FMOs, www.bedrockfs.com. Insurance marketing organizations and insurance FMOs is not affiliated with BWM.